Friends, in this video for I Thought Wealth, I'm going to talk to you on the topic why one-time investment in a PMS doesn't work. We all go to a PMS with certain set expectations. For example, we may like the manager. We may like the philosophy of the manager. We may like the philosophy of the product. We may like the category. For example, we may want to be a small cap investor. For specific reasons, we go to a PMS. And what do? We give a minimum sum of 50 lakhs. Most of the time, when we do this at a time when we see a lot of past performance. We come to that decision based on recency biases. It has no bearing on the investment manager or the team or the category. Then we expect that despite the fact that we enter at a place which is very high in the market cycle, we should do very well. But in reality, you have given the money and at a time when things are very, very high. Every portfolio is as good as the market context in which you begin, unless the manager has a lot of ideas or he is going to stagger the investment and you are going to place your continued faith in that portfolio. When I say placing continued faith in that portfolio, it means that you should continue to invest in it even if the market goes down. From my experience, no matter who the manager is, when investors have done this, then they have gone down when the markets fell but continued to invest. And then when the markets went up, these investors have done better than others. As for the others, more people have given the minimum amount of 50 lakhs to a portfolio manager, waited for 1 year or 2 years and got out. Effectively, when people lose patience after investing a very short period of time, they have lost the time and they have lost the opportunity and they have given up a portfolio construction which has happened during this time using the opportunities of that time. Now, what would have happened if they had extended their stay would be this: the manager will continue to fight, and when you give them more and more money in small tranches, they will create new positions which will start performing better. On the contrary, if you are going to be extremely judgmental, then you are going to move out and start the same journey in another place. Interestingly, the other guy is lucky because when the markets are lower, you take out the money from one team and put it in another team. This is particularly true of the more aggressive themes in a market. And as luck would be, people bet very heavily only on the most aggressive themes. So, if you want good returns from an aggressive theme, you must commit not just a lump sum, but more than a lump sum. You should invest some money every month, or you should invest a 10% when it falls and another 10% at another level. So, multiple tranches will save the day for you, even if the time you began is wrong. Many people wait and wait and wait for the perfect moment to begin, and that is why they begin late. And again, they wait and wait and wait for rewards, and that is why they exit. So this waiting as a concept often doesn't help most of the investors who participate in a PMS. On the other hand, people who keep it simple, make a beginning and invest consistently tend to do very well and get the best value out of the concept of a PMS, which is a product which does a higher quality of investing for you. Investing is about maintaining continued confidence, maintaining the habit of investing steadily, and showing patience. Only a combination of all these three things can make your PMS investment hugely successful. On the other hand, whoever be the fund manager, if you give them money when the markets are very high, they are going to take definitely more than 2 years to show you performance. Effectively, you're setting yourself up for disappointment and not doing anything about your investment that could make it successful. You're putting the entire onus on the manager and externalizing. On the other hand, your friends who are more flexible, more open, and extending their trust in the manager will be doing very well. So, people who begin in the same context will have different results. I'd rather every investor who invests in a PMS do what is sensible, invest consistently, and take advantage of market corrections by showing continued faith in the product, in the team, and in the manager. That, in essence, is how you can make your lump sum a successful investment, and you can make that PMS product work for you. Thank you for watching this video.